Hello, today we're issuing our latest report on the Irish residential property market, which looks at the performance of the residential sector over the course of the first 6 months of the year. And perhaps the first most notable trend we see is a continuation of the moderation in the pace of house price inflation that began about 12 months ago. So average values in the first 6 months of this year have risen by about 2.1% across the country overall. And this compares to inflation of about 4.5% in the same period last year. When we look at the 12-month figures, average value increase in the 12 months to the end of June of this year came in at 3.6%. And in the 12-month period to the end of June of last year, average values had increased by about 9.6%. So that's a really stark indicator of the moderation in the pace of price growth. Average values in Dublin in the first 6 months grew by about 1.5%, whereas average values outside of Dublin grew by double that level of about 3%. Now, this is quite unusual to see Dublin values growing by less than their rural counterpart, and it's unusual if you look back over the last 20 or 30 years of housing data. However, it does point to the extreme lack of supply outside of the urban centres, particularly in rural Ireland, where stock hasn't been replenished at all over the last 10 years, and that's really putting significant upward pressure on house prices outside of the urban centres. Now, if we look at private transactions, and by private transactions I mean transactions that are not block sales or sales for social housing purposes. There were about 12,500 private transactions in Ireland over the opening 3 months of this year, and that's the latest data that we have from the Property Price Register. About 10,600 of these were in the second-hand market, with the remaining in the new home sector. So if you look at that in comparison to the previous years, it reflects about a 2% increase in overall transactions, but an 11% increase in terms of new home sales. Now, the reason for that is that increased level of output in the new home sector in 2022. Unfortunately, the trend in terms of new homes is perhaps a little bit disappointing as we look to the rest of the year, however, with commencement data suggesting that the average output level in the new homes sector this year will be less than last year. That trend of upward increases in terms of new home sales is unlikely to persist. And then finally, if we look to the letting sector, we all know that there has been an exodus of private landlords from this market for well over a decade now. Unfortunately, that trend hasn't changed. So if you look at the first 6 months data, we can see that about 12% of private transactions were investors buying a property to become a landlord, but 35% of our vendors were investors leaving the marketplace. And if you extrapolate those figures and look at estimated sales levels for the first 6 months of the year, they suggest that we've lost somewhere in the order of 6,000 tenancies in the opening 6 months of the year, and this will increase to somewhere in the order of 15,000 if the current trend persists. So all in all, for the first 6 months, we see, thankfully, a moderation in the pace of house price inflation, a little bit of an uplift in terms of transactions. However, that persistent exodus from the private rental sector has continued. If anything, it has worsened this year, which places a very significant burden on that rental market as we move into the autumn season.